Why do you need a Swiss financial advisor? Many investors get the urge to step up their game and increase their annual return. However, despite wanting it so much, only a handful are courageous enough to actually take any substantial action. The majority traps itself in its own prison thinking, should I wait for the big offer to come my way? Or, I know I need to get educated about investing, but I have no time. The downside of this situation is that the right moment flies by. This is where you need to look at the big picture and ask yourself, could I do better with some help? To up your investment game, you need a financial advisor. And what does a financial advisor do? A financial advisor provides services to an organization or to an individual. They provide financial planning to clients and guide them about investment markets and develop strategic solutions to financial investments, taxes, and estate planning. The overall goal is to increase clients' wealth. Before we look at the Swiss part, let's look at some reasons why you need an investment advisor in the first place. A whole universe of financial securities exists, just too many options. What normally happens is that people get confused, and the path of least resistance for novices is to follow the herd, which of course isn't always the rational thing to do. A financial advisor stops you from blindly following the crowd. He finds investment opportunities that fit your financial goals, and this can sometimes result in doing the opposite of the trend. Fear trumps excitement. This is just basic human psychology. We're more afraid to lose something we have compared to the greed of gaining something new. And this reflects in how the inexperienced act in the market. They react to market changes out of fear. When the index drops, they panic and sell at the wrong time. Professionals react to market movements professionally. In fact, they would sell a security from your portfolio if that helps your financial goals. Fear of investing is the main reason many end up with a lot of idle cash in their portfolio. It's fine to keep some cash, but a lot of cash decreases your returns. A financial advisor reinvests your money every time there's some cash in your portfolio, which means better returns. Many beginners lose money in the market despite having some education about securities. It's because they have loopholes in their investment strategies. Sometimes even the old-timers mishandled risk. A financial advisor uses better risk management and uses scientific strategy for investing. A common occurrence is that individual investors miss a profitable, sometimes even a lucrative opportunity because they're not paying attention. Financial advisors are trained to evaluate investment opportunities and their potential. It's not unusual to get sidetracked by life's activities and lose sight of your financial goals, but an asset manager is there to keep you on track. Think of a fitness coach who plans your workout routine and motivates you to stick with it. Your asset manager is like that. Investment bias is common among beginners. Sometimes people invest not because it's worth investing but because of their bias. For instance, your dad always invested in XYZ and now you're sentimental about it. You rationalize investing in it regardless of if it fits your portfolio or not. The asset manager uses experience and research to optimize your portfolio instead of letting bias get the best of you. Investing and managing portfolio requires commitment and hard work. Many individuals do it. You can too, but there might be times when you feel like it's taking up too much of your time and you want to take a break or go on vacation with your family. You'd need someone qualified and experienced to look after your portfolio. That's where financial advisor comes in. To make tough decisions, you have to ask yourself tough questions, and a financial advisor does that. For instance, an advisor would normally ask, what are your retirement plans? What happens if you lose your job? Do you need to update your will? Of course, this is not just a question-answer session. The answers to these questions forms the foundation of your investment plans. So where are these financial advisors? Where are the good ones? The best ones? What about regulations and compliance? Does my location matter? Which country is the best for managing wealth? I'll leave the debate about the absolute best up to you, but what I can tell you about is the country recognized for its banking system. Switzerland is still the hub of private wealth management companies. Many global investment firms have their head offices here. Why? There are many reasons. Swiss banking secret still exists, and violating it gets the offender punished under the Article 47 of Swiss Federal Act. The offense includes providing clients' data to third parties, and the punishment is 3 years imprisonment plus payment for damages as a result of sharing information. Until 10 years ago, this banking secret was strictly followed, even for international clients, but since Switzerland has signed the OECD contract, they now cooperate with foreign governments on money laundering and related crimes. What this means is that the banking secret doesn't exist in its old form for foreigners. Regardless, it's still not easy for a third party to get a Swiss bank to share client information, but this shouldn't encourage anyone to avoid tax payments or to hide accounts. If you're an international investor and you invest with Sam Deji, which is a Swiss wealth manager, it opens your account with direct tax reporting and payment if it's supported by your home country. For German investors, this would be source tax reporting, a direct payment to the German government. Even without a real banking secret, Switzerland is still the benchmark for investment advisors and money managers. For example, Swiss asset managers can adopt the code of conduct in the interest of customers, such as Polyreg, which Sam Deji is also a member of. Sam Deji offers money management and financial advisory that starts with understanding your objectives. We analyze your personal and financial situation to better understand your risk profile. We offer 3 modules: an enduring core made of exchange-traded funds. It's called enduring core because it's optimized in a way that the positions endure for a long time. A second layer of algo trading strategies adds additional diversification, which are not correlated to the enduring core. And third, additional programs run by professional and highly experienced traders. Everything is coordinated through a risk management tool which oversees risk among the different trading programs. Before I leave, just a couple of pointers to keep in mind when choosing your financial advisor. First, don't confuse a stockbroker with a financial planner. And second, when you're looking for an advisor, do read their code of conduct. It will serve you well. See you soon.